Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Morning, everybody. Welcome back to the Investing Podcast, presented by Tusk Media. Before you dive into this morning, go ahead and check us out on Twitter, on Facebook, twitter.com/TuskMediaLLC, Facebook.com/ you guessed it, Tusk Media LLC. Everything is there. We're going to try to get back at some live shows later on in the week. In the meantime, this is your Morning Market Mimosa. I'm Andrew Hall. Joining me, as always, in the morning, Ben Nye. Ben, how are you?
Doing well. Early start today.
Yeah, we're getting after it. Right here, ready to rock. We're going to try to hit all 3 episodes today. Famous last words, but we'll make intern Barrett come out and cover if nothing else. Let's just jump right in. Futures down a little bit. Dow futures down 7 basis points. S&P futures down 10. NASDAQ futures up just a little bit, up 10 basis points. Gold down just a little bit. Oil up about 0.5% in futures trading. But a number of headlines we want to touch on, starting off with Ackmania. Ackman and Chipotle.
Yeah. So Bill Ackman is a hedge fund manager in New York. He runs a hedge fund by the name of Pershing Square. It's actually traded, he actually has it's traded as a stock, like PSQ or something like that. It's down 26% year to date.
Solid.
He's made some not so good moves, buying Valiant Pharmaceuticals. Some of his other, he's had some good hits in the past. Like he bought General Growth Properties right in 2008, right at the bottom. Made like 100x his money on that.
Yeah.
He's invested in Canadian Pacific Railroads. But then he was also the mastermind behind JCPenney's transformation from a company that was struggling to a company that was almost bankrupt, right?
Yeah.
Because
they overhauled the whole store process. Yeah. They got rid of sales and basically said we're going to be like, here's the low cost.
Right.
They changed everything with that operation.
And what got me was they brought in the CEO who was still living in California, even though the headquarters were on the East Coast. He would commute by private jet every week. It's incredible. It's
seems legit.
Yeah, he was really committed to the job, I guess.
Yeah.
When we moved to Narwhal, we go all the way. I move all the way to Georgia. So
yeah, Ben doesn't just fly in from across the country every morning just for this.
Right.
Yes, they're taking a big stake in Chipotle, a company that I feel like have talked about and joked about on the podcast quite a bit. I personally am not a fan of Chipotle, not just as an investment, but just I think it's pretty overhyped. But what can we expect from this stock now? Are we going to see an Ackman bump, so to speak, or?
Well, I think we're seeing a bit of that right now. It'll be really interesting. I looked at some of the earnings numbers that they had. Mm-hmm. And so when you value a company, you tend to value it on a multiple of earnings. Now this company made $15, a little over $15 a share in 2015. This year, they're expected to make $3.82.
Those out there listening, if you think about it, $3 is a lot less than $15.
So the stock right now is at $440 or thereabouts. So we just propose this question to you as listeners. What would you pay for that $4 per share in earnings? Would you really pay 100 times that earnings number in order to buy Chipotle?
Ackman would.
Ackman
did. It's an odd story in a lot of ways with Chipotle. I think it's one of those companies that had that kind of cult following. It was a prestige brand in a lot of ways, and now the shine is off of it. I don't know. It'll be interesting to see kind of how they turn that around. So he's taken almost a 10% stake in the company. Apple, big event today. They are releasing, we think, the new iPhone, all that good stuff. Wanted to run through a couple features that are expected to be on the iPhone, or at least rumored to be. Number one, they're talking about removing the headphone jack. And supposedly this will enable the phone to become water resistant. Thoughts on that as a feature? Seems pretty cool.
Yeah,
odd, but cool.
It sure, yeah. I think they're going into fuzzy territory if they're all of a sudden saying that it's going to be water resistant. What's interesting with Apple is that it seems like we're taking minimalism almost to the extreme. It's like we're just going to have a piece of glass at some point in the near future.
It doesn't actually do anything. It's
right.
just a piece of glass.
It's
the simplest iPhone yet.
Exactly. Simplest iPhone ever in the history.
So now they've got supposedly the home button is going to have that 3D touch technology, which I think the 6S had, and all that good stuff. So I guess that actually I could see being convenient. I know on mine, sometimes I just want to tap that home button so I can pull up whatever the little slide up menu is called, and it just unlocks the phone. Kind of drives me crazy. And then supposedly they're going to have an even better camera, which is a guy that doesn't really get behind photography at all. When they say it's going to be a professional grade camera, I'm kind of like, well, what's wrong with the one we got?
Right.
So nothing groundbreaking. Probably the iPhone, headphone jack removal potential could be there, and then maybe that's unique or different. But for the most part, more of the same. But I guess the broader conversation in terms of investing is really expectations for the iPhone. And just curious as to your thoughts. Are expectations too high, too low? What do you feel?
Yeah, I think that it's just going to be difficult for anything to really beat in a substantial manner.
Mm-hmm.
I don't think expectations are extraordinarily high, but I think that's for good reason.
Mm-hmm.
I think, at least personally, for me, I'm going to be buying my next iPhone because I need the more memory space.
Right.
And it's independent of any of the technology upgrades that they have. I just want the memory, and so that'll get me.
So you can keep all your investing podcasts.
Exactly. Yeah, I keep having to delete them, and it's like I want to go back in the archives.
That's right. So that way he can keep the audio and the video. Shameless plug there. Check those out. Yeah, it's interesting to see just kind of the hype of the Apple events. They are truly events. People talk about them like it'll be front page news tomorrow what the iPhone does and does not have. So it's interesting with that, and then you kind of look at what the market's expecting, and I agree. I don't think it's overly high. I think it's also kind of difficult to beat, and some of that is not necessarily a bad thing. To some extent, we kind of know what the upgrade cycles look like now. We do think they're kind of broadening, becoming a little bit longer, and with that in mind, we can kind of actually track consumer behavior with these things, unlike other individualized products where you might have a niche trend, quick hitting thing. We kind of know who's going to buy iPhones,
right? And
we kind of have a grasp on that. So the Fed and the rate hike or the non-rate hike, we've been talking about this story for quite a while. Now we're kind of starting to get an evolving situation. We talked about this yesterday. It becomes very fluid when you start to look at constant data feeds and constant reaction and anticipation of further reaction. And we're starting to get a little bit of conflict. We're seeing now the market indicating that there's a less likely chance of a rate hike in September, but we're also hearing from people very close to the situation that they want to move forward with the rate hike.
Yeah, it's interesting because in the past we haven't seen the Fed move really on anything unless the market is already there, and unless they've already programmed the market. It seems like they're trying to program the market to think that, but the market's just not budging.
Right.
And even by the end of the year, they're talking about 50% chance of a hike, which seems very low relative to how they're talking.
Yeah.
So it'll be really interesting to see what they do on, I think it's September 21st. Is the date. We'll get a little more data out, but we're not going to get any more material jobs data. We're not going to get any more ISM data. That's going to be those are the biggest movers.
Big drivers.
Yeah. So I'm sure they'll go into kind of a little bit of a cold period. We'll get some articles in the Wall Street Journal, but it's kind of up there. I would say that in terms of my view, my probability is higher than the market. And the market's only talking about 20% chance.
Mine as well. I don't know that I'm certainly higher than 50% chance by the end of the year. I don't think I am to 50% for September, but I think I'm close to maybe 40% would be my general read. And by the end of the year, I'm at 70%, just based on what's being said. And again, we get this data and things could change really quickly, on an ongoing basis. And, couple bad reports in a row, and all of a sudden you're really taking a step back from that, but just because of the way the Fed's been talking, which again is a little bit of a deviation from how they've behaved in the past, where they've almost wanted the market to anticipate what they're going to say, and then they meet that anticipation.
Right.
So a little bit of a deviation there. So that's all we got for this morning. We will be back at lunchtime, and we'll be back at the end of the day. Thanks for being here. Hit subscribe, download, leave us a 5-star review. We'll read it on the air. Talk to y'all soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.